India's infrastructure trusts hold about 2.5 lakh crore in assets, road, power and fibre concessions, distributing a 7 to 9% yield. The yield is the announcement. What decides whether it lasts is the toll concession structure, the traffic assumption and the cost of debt, and those are averaged into one blended line. A portfolio manager runs an infrastructure trust sleeve at a 7.8 to 8.4% yield, 11 to 12% total return, comfortably above the 10-year government bond. The case over a real estate trust is the CPI-linked toll, a natural inflation pass-through. The friction, the residual concession period, is not broken out per asset. New sponsor assets grow the trust, but the weighted average concession life is shortening, and the terminal NAV is now more question mark than anchor. An investor relations head has held a stable narrative for 6 quarters. Distribution cover 1.12 to 1.18 times, traffic growth 6 to 8%, 3 sponsor build operate transfer assets in the pipeline. Those 3 assets have 8 to 11-year residual concessions. Injecting them refreshes assets under management but does not extend the weighted average concession life. Cover of 1.12 at year 10 of a 20-year concession is not the same risk as 1.12 at year 3. The disclosure does not break the vintage out. A project finance lender has repriced trust-held road debt from MCLR plus 125 to plus 85. The trust proved lower risk. But 3 of 7 roads carry an unfunded major maintenance reserve of 180 to 240 crore. Once it is funded, distribution cover compresses to about 1.04. And on 2 corridors, fast-tag traffic is running 3 to 4% below the model, covered by CPI toll revision. Post-maintenance cover near 1.04. A government bond reset of 80 to 100 basis points erases the spread. Until the CPI cycle misses a year, the cover gap doesn't show. What is announced is the yield. What is averaged into it is the residual concession, the traffic assumption, the maintenance reserve, and the cost of debt. They distributed the yield. The concession decides the duration. So publish it, per asset and per vintage, the distribution cover and the residual concession the durability actually runs on. The disclosure standard the announcement has been averaging out, sector after sector. Read the full brief.